You actually showed in your earnings that the environment quite deteriorated in the last quarter of 2018. Can you talk about
Yes, good morning. Well, if you look at the year 2018, overall, there was good business development. If you look, for example, at our loans, they're up 4%. Net income held up well, because indeed, it is true that over the year, the environment of the markets were quite lackluster, and towards the end of the year, they deteriorated. Now, if you look back at our retail activities, like our domestic markets and international financial services, they performed well, in line with the objectives. But indeed, CIB was impacted by that market turmoil. However, BNP Paribas, being a diversified bank, we clocked in 7.5 billion euros bottom line. Lower 3%, because we recorded also at year-end a point-in-time drop due to the drop in markets. And so, if you look at our balance sheet, we're very solid. Common Equity Tier 1 up to 11.8%, so very well on track to our target of 12%. And on top of that, a dividend of 3.05 euros per share paid in cash. So all in all, if you look at that, it basically confirms that we're well on track for our ambition towards 2020.
Well, let me talk about that actually, because you did amend your 2020 targets. Actually, I see that you're adding 600 million euros to your saving target. So can you walk us through these amendments?
It is true that if you look at our retail activities like domestic markets and international financial services, they are developing well in line with our objectives. However, as we discussed, CIB, if you look at the overall revenue pool, our outlook is a little bit more moderate than what we had in the past. And so therefore, we step up our cost reduction, so we add another 600 million, so we go from 2.7 billion recurring cost savings in 2020 towards 3.3 billion. And that basically means that our three businesses will have positive jaws, so revenues growing faster than the costs in all of them. And so we remain very focused on the overall ambition of our plan.
But could you foresee job cuts?
It is. If you look at what we're having, there is a reduction in, for example, the overall growth that we have in some of our areas. But that goes normally with natural attrition, and there is nothing specific to be added on that.
Okay, well then, can we expect the French retail revenue to grow back in 2019?
Well, if you look at the fourth quarter, you saw a pickup. But let's be fair, in Europe, given the uncertainty also around the monetary policies, I would guide that the overall growth in our domestic markets will be rather flattish. But that will depend on how the monetary policy evolves.